$200,000 is a lot of money. And if I told you that the median home price for single-family detached homes in Chino Hills dropped by more than $200,000 between February and March of this year, the word crash would probably come to mind. Buyers, before you get your hopes up, and sellers, before you panic, stick with me because the real story is not what you think. And if you want all the data I'm about to show you in a format that you can actually use to make your move, the complete March market intelligence report with every number, every comparison, every 3-tier strategy guide, I'll link that below. It's free and it's built specifically for families like yours who are making a move up decision based on real data, not headlines. I'm Mike Velez, broker owner of Building Realty. I've lived right here in Chino Hills for the past 28 years, and I've seen this exact headline pattern 4 times before, where 1 month of data gets blown out of proportion. That's why this month I pulled every sale, every listing, every price change from our MLS, because the families I work with need the full picture, not the fear. And if this kind of behind the scenes market analysis is helpful for your move up decision, hit that subscribe button. I'll be doing this type of deep dive every single month, and you'll want to see how these patterns develop over time. So for this video, I've broken this analysis into 3 parts. What the numbers really show you when you look at everything together, why there's a 14-day line that can make or break your final price, and how there are actually 3 very different markets within Chino Hills right now, each with its own rule set. So here's what you need to know. Let's start with the raw numbers: sales, inventory, and prices. Because when we look at everything together, the picture becomes much more clear. So in Chino Hills, there were 35 single-family detached homes that sold in the month of March. That's up 15 from just 20 in February. And for March of last year, we had 8 fewer closes from the 43 of 2025. So we're up month over month, slightly down year over year. That's normal for this type of spring activity. How about pending sales? These are the homes that are under contract but haven't closed yet. We hit 34 at the end of March. That's up from 29 at the end of February, and down slightly from 39 this time last year. The pipeline is growing. That means the spring buying season is kicking in right on schedule. Now here's where the numbers start to shift. There were 91 active listings in the city of Chino Hills at the end of March. That's up from 70 at the end of February and up from 71 from last March. New listings in March was 66 versus 44 in February and 47 last year. This means more inventory to shop from for buyers and more competition for sellers. Exactly what you would expect in a spring market. Now months of supply for March was at 2.7. That's up from 2.1 in February and up even more from 1.9 from March of last year. And here's what that actually means. Anything under 6 months of supply typically favors sellers. At 2.7 months, we're still firmly in that seller's market territory. Now here's where it gets interesting. In February, the median home price in Chino Hills was $1,226,523. That was the highest median price since April of 2025, just before a pretty significant market correction that lasted until this February. In March, that number dropped to $1,020,000. Now that's the $206,000 drop that I mentioned in the opening of this video. Here's the full context behind it. Between May of 2025 and January of 2026, the average monthly median in the city was $1,090,000. February's number was high because more expensive homes happened to be closing that month. March's $1,020,000 price. That's almost exactly where we were a year ago, and it's not too far below the 10-month average from last May. That's not a market crash, that's a stable market returning to its baseline after one unusually high month. I've been tracking this market for 28 years, and I've seen this pattern before. 1 month of data never tells the whole story. What you're hearing in the headlines and what actually is happening in your neighborhoods are 2 very different things. And inside that stable market, there's one number that tells you exactly who's winning and who isn't. And it was actually the case last year. There's a 14-day line in the market. Cross it in the right way and you make more money. Cross it in the wrong way and it starts costing you. And this works for both buyers and sellers. Median days on market was only 8 days. That's down from 22 in February and slightly down from March of last year, which was 12 days. The market is moving fast right now. But here's the pattern that I want you to understand. Homes that sell in 14 days or less are much more likely to get full price or above asking. Go past 14 days and your chances of getting top dollar start to drop. The longer it sits, the steeper the price drop gets. If you're selling in Chino Hills, 14 days is your line. Stay under it and you're in the money zone. Go past it and price cuts usually follow. Here's a real client example. This March, my client at 15598 Oakdale is the perfect example of this strategy working. We priced the home slightly below where we thought it would ultimately sell on purpose. The goal was to pack the first open house weekend with as many buyers as possible. It worked. Zillow predicted it would sell 100% faster than other homes in the area. We had 77 groups come through that first weekend, 40 on Saturday and 37. Now those weren't individual people, those were actual groups of people coming through. By Tuesday morning, we had offers in. It sold in just 8 days from going active at $20,000 over the asking price. with a short 19-day escrow. Hey, if you're finding this data useful, and I hope you are, please hit the like button, subscribe to the channel. It helps me know you want more of these type of detailed market breakdowns, and it helps other Chino Hills families find this information. So what if you're not selling? What if you're a buyer? You can use this same intelligence in reverse. When you see a home that's been sitting 30, 60, 90 days on the market, that time on the market becomes your leverage. I can show you exactly what homes like that tend to sell for versus the original list price. In some cases, a seller who's been waiting months is ready to deal, much more so than when their listing was fresh on the market. These opportunities show up in every price range. Now, that 14-day rule hits very differently depending on how much you're spending, and the penalties get significantly larger as you move up in price. And this is exactly why I put together the complete March market intelligence report. It includes 14-day analysis at every price range, the penalty calculations, and the specific strategy adjustments at each tier. And if you're planning a move in the next 6 months, this data will save you thousands. Check out the link below. Now, you've heard me mention tiers. Well, Chino Hills is really 3 different markets right now. Each price range has its own rules, its own timing, and its own penalties. And most people have no idea how fast the losses can add up as you move up the price scale. So tier 1 in the city of Chino Hills right now is tier 1. Those are homes that are for sale under $1 million. Homes that sold 14 days or less averaged a premium of 101.2% of the list price. That's a 2.2% bonus just for pricing right and moving fast. On a $900,000 home, that's nearly $20,000 in extra profit. But in this bracket, if your home goes past 30 days before accepting an offer, the average penalty is 4.9%. The worst case I found in this bracket for March data, one home sat for 64 days, went through multiple price reductions, and the seller finally took 8.3% less than the original asking price. That's $90,000 gone, and 2 months of their lives that they will not get back. Tier 2, these are homes $1 million to $2 million. Under 14 days still gets you a premium of 100.8% of asking price. But look what happened to one home in the Butterfield Ranch area. It originally listed at $1,250,000. The price was cut 6 different times over 305 days on the market. That's a long time. It ended up at the final list price of $1,149,000. And then it expired. Nobody bought it. It never sold. More than $100,000 in price cuts, more than 10 months on the market, and they ended up with nothing. That's not just money, that's almost a year of stress, showings, and uncertainty. Past 50 days in this range and you're averaging 93.7% of the original list price. That's a 6.3% penalty that translates into real money. Now we're at tier 3. These are homes listed at $2 million and above. This is where it gets really expensive if it takes too long to find that right buyer. There's a hard drop off at 75 days. Before that threshold, even at 30 days and 50 days, it only costs you about 2.2% on average under the list price. However, you cross that 75-day line and you're averaging an 8.6% penalty. Just for some perspective, at $2 million, that's $172,000 that you missed out on. Right now, I'm tracking a home in Payne Ranch that started at $2,188,000. After 182 days on the market, it finally found a buyer and is pending, after reducing the price to $2,086,000. We'll know the final sales price when it closes, but that's already more than $100,000 in cuts just to get an acceptable offer. $100,000, that's a really nice car. That's tuition to college. Every price range punishes sitting on the market, but the dollar amounts get exponentially bigger as you go up. Under $1 million, delays hurt fast and early. From 1 to 2 million, you have a little bit more time, but the Butterfield example shows you can still lose 6 figures if your strategy isn't aligned with reality. Over 2 million, and you have the most room to maneuver, but once you hit that 75-day mark, 6-figure losses happen quickly. The sellers who come out ahead aren't the ones waiting for the perfect offer to magically appear. They're the ones that go into week 1 with a plan to create demand as fast as possible. What that plan looks like depends entirely on your price strategy. And for buyers, when you see homes sitting past those thresholds in any tier, pay attention. That's where the opportunities are. I can show you exactly what a home like that is likely to sell for before you even write an offer. So that's what this March market is really telling us. The median price drop shows that we're in a stable market, not a crashing one. The 14-day line shows you exactly how to win in a stable market like this. And the 3-tier penalty system tells you precisely how much time you have before the math starts working against you. Now, if you want a complete breakdown of all this data, every number, every comparison, and the specific strategy guide at each price tier, grab the March Market Intelligence Report below. It's designed specifically for move-up families who need real data to make smart timing decisions. And make sure you've subscribed with notifications on, because the April data is going to tell us whether this stability holds or we're seeing the start of a bigger shift. You'll want to see that analysis the moment it's ready. Now you're probably thinking, okay, speed matters, but what if my home just isn't selling fast enough? Here's the thing. When I see a Chino Hills home sitting on the market for weeks or months, it's almost never the market's fault. There are usually 6 specific reasons why homes don't sell here, and most sellers have no idea they're making these mistakes. I break down all 6 reasons in this next video. Enjoy.